Welcome to the November summary of the Hopkins Group Managed Discretionary Account Investment Committee meeting. We were blessed to have our investment committee meeting in Sydney this month, taking the team up to Sydney to obviously have the investment committee meeting, but also visit a number of fund managers where we were gaining insight into where they see markets heading, how that they think that the things are going to play out, and getting some of that intel directly from the managers in their own environment. My name's Mark Wenzel. I'm the chairman of the Hopkins Group Investment Committee, and this is a summary of the investment committee meeting. The big change in November occurred early in November, and I think that stage markets particularly changed their view that interest rates have peaked, and you saw that reflected in a pullback in yields around fixed income markets. You saw things like the Australian dollar jump versus the US dollar, which perhaps indicates that the US Federal Reserve has peaked on their interest rate rises, and perhaps Australia's still got one, maybe two more to go, which again just sort of adjusts the Australian dollar. And you saw quite a strong rally in the Australian dollar. You saw quite a good move into the property trusts had a pretty good rally, again off lows, and you also started to see some movement in small companies, which for us was a sign that certainly that markets now can see through inflation, can see it coming down, can see it getting back into those target ranges in the next couple of years, and that interest rates have peaked, which from our point of view is a fantastic thing. As I said, maybe here in Australia one or two more, but broadly you're starting to see those interest rate rises that we've had so far flow through the system, and also you saw that sort of flowing through in regards to the employment rate both in here and in the US, and certainly again, as I say, from our point of view, that the market is starting to look like the peaking of interest rates is going to start to see some of the change. And you saw a bit of a jump up, and while you get the jump up, you don't sort of get the bottom. The expectation is that over the next 6 or 12 months that those trends are going to continue, and that inflation is going to come down, interest rates come down, makes it more attractive for property trusts, makes it potentially more attractive for smaller companies, and that's what we saw in the investment committee. And we had a big deep discussion about it. There's certainly some risks potentially that we're a little bit early in making some moves, but we're only making small moves at this stage, to be a bit more confident, but small moves. And certainly over the next 6 months, potentially that you'll see a bit of a move back and a pullback potentially, but still, we believe that this has been a significant month in that there has been a significant change in views of the market. What that means for portfolios is that we made a number of changes, with regards to the portfolio, and really still, neutral, perhaps slightly bullish moves, but we've certainly made moves that are, obviously that we think is going to have a big impact on the portfolios in the longer term. And those moves include, an increased allocation to smaller companies. We changed a couple of the managers in the smaller company space as well. But again, just sort of expecting that those smaller company markets are going to run up. And we've appointed managers that have historically taken advantage of those and got a higher, better performance on the upside than perhaps the defensive investment manager that we had there in the smaller company space. In the international space, we moved out of Intermediate global equities and allocated a little bit more to some of the other managers, and also incorporated a new hedged version of the index part of the portfolio. So instead of it being unhedged, the international component was hedged. And again, just on the expectation around the hedging was that we view that the US have done all the raising that's required. We of the view that they're going to cut rates next year far more vigorously than we are here in Australia. We still think potentially Australia's got one or two more rate rises to go, but certainly I think the expectation is that the interest rate rises in the US are going to start have stopped, and that they're going to start to fall next year, and that's obviously going to make the differential between the Aussie dollar and the US dollar more likely that the US dollar is going to fall in value and the Aussie dollar is going to go up. So in order to do that, in order to protect the portfolio longer term, we instituted some hedging, and as I say, as a result of that, we took money off the Intermediate Global Equities Fund. So that was a change there. In the fixed income component, we made some changes again, sort of moving a bit more to sort of those fixed rate notes rather than the floating rate notes, which again is sort of a bit more defensive on the expectation that the markets have peaked and that interest rates were going to fall next year. With both international property and Australian property, we increased our exposure 1% each. We took some money to fund that off infrastructure, which again we viewed the property was going to be a better performer than infrastructure, and we made those changes to the portfolio, which again we think from a longer term perspective is going to make a significant difference. So some big changes, and certainly you're going to get more details about those, through the notes that we produce and the specifics around those. But overall, we saw November as being a significant month in markets, in that big changes occurred, big changes about what's going to happen going forward, and we've made some adjustments to our portfolios because of that. So thank you for watching the video, and certainly look forward to presenting some more videos for you in 2024, and obviously the continued strong performance of the managed discretionary account portfolios. If you need any more information, contact your Hopkins Group advisor.